Hi everybody, this is a bullish indicator for NIO stock. In my opinion, this is not financial advice, but what I can share here are the insights that I'm personally gathering for my investment in NIO stock. And what I like to share today is an indicator that I haven't spoken about in recent videos about the NIO earnings, and it's the average sales prices, which I'm tracking as an indicator of the healthiness of the business. And well, what you see here is a graph starting at quarter one, so basically since NIO started reporting till 22, so that's the latest quarter. And on that timeline, basically the average sales prices, so basically that's the revenues generated from vehicle sales divided by the number of cars sold in the quarter. And as you can see, NIO started with very high average sales prices because they are positioned in the premium to luxury segment, and over time, these prices have come down. So you can also see this trend line here, which is a logarithmic trend line. But I'm also pointing out here in the slide that I made that these prices are now bottoming out. That means we haven't seen lower prices recently. So in the last 5 quarters, it's staying rather flat on the average sales prices. And in the last quarter, it's actually also going up a little bit. And this is interesting, I think, and why I think this is a bullish sign against the backdrop that what we get out of China currently is news around falling prices overall in the economy, but also a price war in the China car and EV sector. And additionally, of course, also what we have to consider here is that NIO has introduced new models for the ET5, for example, the ES6, those kind of lower positioned models that are available at lower sales prices, which are now taking the whole chunk of sales. So these are the most important models, right? So they are influencing these average sales prices, and the more volume we make, it's possibly rather drifting towards the sales price that it's close to these models, and we can now see it's staying above 40,000 USD. So why is this important? Well, for one, NIO has declared that they don't want to follow the strategy of cutting prices in order to generate more volume. I agree with this. I was rather shocked in the past when they actually started to introduce, let's say, discounts in a way by cutting off the free battery swapping and therefore enabling a lower sales price. That was in the end well done. However, I thought at that point in time when they announced it, oh no, NIO is giving in. They are possibly eroding their brand positioning. This is basically an evaluation, if you will. This is called goodwill. It's something where a buyer of the business would actually attach some virtual value to, because this is not something that you actually see in a balance sheet, for example. But over time, what NIO is trying to establish here, in my opinion, is, for example, with the NIO houses, with all of the social events that they're doing, with the NIO lifestyle, with a higher positioning against competitors, higher quality, higher service level, and all of these issues that are oftentimes criticized by investors, but I think in the long run will actually achieve something that is creating a moat. It will be difficult to copy, especially for a Chinese brand. We haven't seen anybody succeed in that area. For example, the other Chinese brand, Hi-Fi, seems to be going out of business, who are also similarly positioned to NIO. And so NIO ultimately, when all of this price war is over, could come out as a winner. And this data points here are now supporting that NIO seems to have found a bottom at which they are not, for the NIO brand, introducing lower priced models. So these average sales prices are possibly staying at this point, or maybe even go a little bit back higher. And they are not using the price war in order to fight for customers. And this should have good indications of future profitability and future positioning for the brand. And I think this is something which validates NIO's business idea and which investors should be happy about. And at the same time, it's also pointing towards the maybe it's a little bit too early to call this, but that kind of, the vast news of negativity might be behind us when it comes to surviving this, incredibly difficult period right now where there's increased competition. It doesn't seem that NIO is headed off track because of that context and environment. That's my personal reading to it. And now you have others, like, for example, the most prominent ones, Tesla, who need to cut their prices in order to even capture the same market share. Well, Tesla basically saying, well, we do have efficiencies that we are getting because of better manufacturing and so on. And ultimately, it's our goal to drive down prices for EV. However, NIO is doing that in a different way by launching sub-brands which will be positioned lower, which will have more volume as well. And in the end, if this all works out, that means high margins and high average sales prices for NIO. And in my point of view, profitability at incredible levels for a Chinese brand that others possibly cannot replicate. So that's why I think this is a very important statement here and KPI to watch. Of course, there are, maybe next quarter this could show a slightly lower number again, because they are now transitioning between platforms, the 2.0 and 2.2 platform, and therefore there might be some real discounts on some of the old models, the 2023 models. They now started the 2024 models. By the way, hasn't JP Morgan just downgraded NIO because of a lack of new models, but now NIO is starting to bring out the 2024 models. And don't get me started on whether or not these are not new cars. In my point of view, NIO cars from the outside are very good in this competition still. There's no need for a revamp of those models in terms of the outer experience, but there have been quite a bit of criticism towards NIO, especially on the inside and on the software. And I think I've reported here on the channel my own experiences on the improvements on software, but now I'm looking very, very forward to the improvements on the 2024 models on the inside. So now all these things are coming together now, and I think it doesn't look as bad as it felt in the last couple of quarters, actually, when we were driving down the prices here. Because the overall industry is coming down, because NIO introduced new models. All of these factors have contributed to lower average sales prices, but now it seems that they are bottoming out and we can look forward, and possibly the plan for NIO has worked out, that they want to stay in this unique positioning. Thanks for watching, and see you in my next videos.